This podcast is produced by Back Roads of Illinois. Welcome to the Markets Club podcast. Every Wednesday, bring you the markets information about the commodity markets along with the world events. We are bringing you your markets information on the Markets Club. We're having good guests on today's program with Chris Robinson from Robinson Marketing out of Chicago and Mike Castle with Donna Hughes from StoneX. We're going to talk about the fertilizer prices for right now with world events and in the Middle East, and we were talking about the commodities with Donna Hughes. This is Markets Club podcast with Cesar Delgado. This podcast, you could download it where you can download your podcast are. We are back with Chris Robinson from Robinson Marketing. Also, we are joining with Mike Castle and Donna Hughes from StoneX. Stay tuned. I'm joining with Chris Robinson from Robinson Marketing out of Chicago and part of TGM. How are you, Chris?
Good to see you, Cesar.
Let's start with our conversation about the World Agricultural Supply and Demand Estimate report on this Friday. It will be bullish or bearish from the Department of Agriculture. What is your sources for Brazil's beans?
Well, I think people are anticipating that the carryout for the United States will continue to be larger. That's sort of the expert anticipated opinion. They may dial back some production out of South America. There has been a lot of arguments really for the past 3 to 6 months about that the USDA was overestimating the size of the South American crop. So we will get that fresh data dump in 48 hours at 11 o'clock. We will reprice, and then we'll probably be back to trading weather if there's no big surprises there.
I heard that this report is crucial to the markets.
Yeah, this is a big one. This is the time of the year. If you go back and look at the growing season, you can look at May, June, very critical price discovery months. You can go back to 2012. We had a big sell-off in May. Then we actually, at the end of May is when we turned around and started trading the drought. If you go back to 2014, that was, we peaked out right around this report. We had our highs and then kept going lower for 5 months. So it can be a very important report for price discovery.
Chris, how do you see domestic violence markets and counting with the rally? Would you like to go to see the prices are steady? What is your thoughts about these commodity prices?
Well, the good thing is we've had a tremendous rally from our lows. If you look at especially new crop corn and new crop soybeans, we had a little bit of the sell-off here today on Wednesday, but up until Tuesday, we had seen a dollar rally off the lows in soybeans. That's huge for the American farmer. We grow 4 billion bushels of soybeans, $1 and 4 billion bushels, it's $4 billion worth of revenue. As far as corn didn't quite get a 50-cent rally off the lows, but it's still a good recovery after we were down at 30-month lows in February. So we know what the worst case scenario is for December corn now, 446. December corn, for a number of reasons, we'll have to see what happens on Friday, but December corn was not able to hit the 200-day moving average at 495. Most farmers are fixated on, and rightly so, that they want corn north of $5. So that's a big hurdle. 495, 5. So corn hadn't had quite the percentage rally that soybeans had. But long story short, we had a dollar, anywhere from $1 to $1.25 rally in wheat. That was a great rally for producers to try and do something with. We were at 4 or 5 month highs there. So the market just gave you a chance heading into the report. Maybe you missed the absolute high of move, but it still gives everybody a chance to sell something if they need to. It gives people a chance to protect with a hedge with a put option if they need to or they want to. And again, $1 worth of revenue with soybeans, that's something worth protecting.
Yes, I hope things are not going to be held down at 4.59 on December corn.
Yeah, you and about 300,000 farmers, everybody that grows corn. We had a really hard start to the year. Back in October, we were at 520, 530, and we started the year, we gapped lower, took out 503, then just hammered all the way down to that 446 level. So we dropped 80 cents between October and February. That was a hard pill to swallow for a lot of farmers. So it's been a decent recovery. Haven't got back to those 520, 530 levels. We have a very large carryout, Cesar, which is really what's driving this market. It's supply and demand at work. Now, I mentioned earlier, once we're done with this report, good or bad, bullish or bearish, we're going to be watching the growing season. Back in 2012, we were lower all the way through the last week of May, and then Mother Nature turned off the rain, and we had that $3 rally. So there's still possibilities out there. Just a lot is depending on the weather, I think, this year.
How do you see the demand for cattle on the grill season in the U.S. because of the bird flu from Texas and Kansas?
It's held up surprisingly well because of the bird flu, despite the bird flu. And if you go back 20, 25 years, we've had these types of scares before. That's really the word that I would use. I'm using that word, not to say that the bird flu is to be taken lightly, but we've had these before. 2000, and we've had worries about mad cow disease, BCE. Then we had, some unpopular news stories about how hamburger was made with using chemicals, and they called the pink slime. Prior to that, back in the late 90s, Oprah Winfrey said that she was never going to eat a hamburger again. And so we've had these types of news before. In the end, once the market wraps its arms around what the truth is, you've seen it, and where the market has come back. So we'll get back to trading fundamentals. This is not a story to be taken lightly. You can defend against it with hedges. That's why we hedge, because it's very difficult to have a crystal ball that tells you how this is going to turn out. So hedge what you can, protect what you can, and let's hope we can get through this and get back to trading fundamentals, which up until 3 or 4 weeks ago had been pretty friendly. So the herd's too small, demand has been good, and that's been a positive for cattle.
Like a black swan event.
Yes. Yeah, you can't. It's hard to hedge against that if you don't have your protection on. If you don't have your put on before it happens, you can get caught, out of position. So nobody has the crystal ball. We had a really good rally. We had a severe break from down to December lows. But if you look at the overall move in the past 3 years, really since the pandemic low, I mean, we had a horrendous sell-off during the first part of the pandemic. I mean, it was just terrible. We had a very, very big sell-off. Then the market came back. So we've had these types of disruptions in the past. Fundamentally, I think people, if they can, they will continue to buy beef. And fundamentally, there's generally been more demand than supply And that's what's helped us have this big rally that we've had in the past 3 years. If you look at the big picture, go back and look at where we were 3, 4 years ago, we've been on a tremendous rally, and we're near the upper end of that. So, not to say it hasn't had some nasty corrections, but the overall trend has been up for the past 4 years for cattle.
Back to the grains trading, Chris.
Yes, sir.
What is the yields for Brazil, especially in Mato Grosso do Sul, Brazil? Could you tell our listeners about these yields in Brazil?
Yes, the yields in Brazil have been under uh, kind of close examination. We're going to get some new updated information. They have been looking at a pretty robust crop. However, with the rain, it's making it harder for them to to finish their harvest. That's also put a little bit of a bid under the market. In northern Brazil, however, it's too hot, so that's actually putting stress on the safrinha, the second corn crop there. So you have those two competing weather models. And then the last thing is there's some stories about um, some I think they're called leaf jumpers, to be correct, down in Argentina, going after the corn crop. So all of that stuff, anything that we can get that lowers yield will be supportive for corn and beans. And that's kind of what's driven this as well. So it's kind of one of those things, bad news is good news, because the South America had a pretty good sized crop. So that's something that we always have to deal with. We are in competition here in America with that crop year in and year out. So any type of weather issue, be it too hot in Brazil or too wet, where that can damage yields, lower yields, that's supportive. And that's part of the reason we've had a dollar rally in soybeans. We had a tremendous rally in soybean meal. That's also been driving this market because South American crushers are not willing to crush right now. So it's put a big demand on meal. And that's something I would continue to watch. So lower yields, higher prices.
I feel bad for the farmers in Brazil, but I hope that our season is going to be great for us.
Yeah, that's the nature of farming and the nature of business. When you have too much supply, you need to cut in that supply, and so it's kind of one of those things. Hopefully, everybody does well, but in order for us to get back to 14, 15, $16 beans or $6 or $7 corn, it's gonna have to be Mother Nature. That Mother Nature is the one in charge there.
Right. Do you have any final thoughts about these commodity prices and Brazil's issue, U.S. planting season?
Well, we'll see. I think that any way you cut it, May, June is going to be have a lot of opportunity and a lot of risk. We're in the teeth of the growing season. We have had a nice rally here. That's the thing. I always try and be positive. Glass half full. What's good? Well, the good part is we just had a 45-cent or 50-cent rally in corn. That's good. The good news is we just had a $1.30 rally in wheat. That's good. The good news is we just had a dollar rally in soybeans. That's good. Now, we may get some of it back. That's the nature of the market. But big picture, you've been given a little bit of a breather here as we head into the growing season. So take advantage of it. That's how I'm approaching it.
Thanks, Chris.
Thank you, Cesar. Good to talk with you. Good to see you.
This is Chris Robinson from Robinson Marketing out of Chicago and part of TGM Markets. We were coming back with Mike. Welcome back on the Markets Club. We were joining with Mike Castle and Donna Hughes from StoneX Financial. Welcome to the show. How are you guys?
Doing well, thanks. Thanks for having me on.
Yeah, same. Doing great. Thanks for having me again, Caesar.
Mike, let's go with our conversation about the fertilizer prices for right now, alongside with wars and inflation, but the markets are trading pretty crazy.
Yeah, absolutely. In general, across the board on fertilizer, we've seen a pretty solid correction over the last month or two. Kind of an up and down year to start 2024. Saw a lot of production issues with the cold we saw kind of sweep across the country. Really ended up wiping out a lot more production than we expected. We just had all of our Q1 earnings calls from the big fert producers, and pretty weak production numbers because of that. And then, obviously the beautiful weather that we had back in February, brought a lot of demand forward a lot sooner than expected, kind of caught the market off guard. So we really kind of hit our spring peak a lot earlier than we would have. Back, say, early March or so is kind of when everything peaked. But in the last month or two, once the weather kind of slowed things down throughout March and April, and now here starting into May, we're kind of able to play catch up a bit, let the big imports we've seen to start this year kind of work their way into the system. You mentioned the wars going on. Obviously, we're still having to keep a very close eye on the escalations in the Middle East just because of how important that region is to overall global nitrogen supply. Always kind of a good reminder to point out that, essentially half of the entire world's urea exports come from this area. And also have an impact on P and K to a lesser extent. So overall, still having to keep a close eye. Things have calmed down to some extent, not seeing as many attacks in the Red Sea, but still every so often. The one ship that we did actually see get sunk in the Red Sea was carrying fertilizer, going from Saudi Arabia up to Bulgaria. Just kind of highlights that risk. Thankfully, though, the Red Sea issues have kind of been baked in at this point. The bigger risk would be if we saw something similar play out on the other side of the Arabian Peninsula, because that's where kind of the bulk of that nitrogen supply comes from. But unfortunately, kind of still tensions that direction. But not too many direct impacts, and we've kind of priced it in at this point.
Yeah, it's been really hectic for right now.
Oh yeah, it certainly has been.
Donna, what is your perspective of the commodity markets along with the world events? What's your thoughts on this?
Well, producers are keeping a close eye on world events, knowing that it's not just about what goes on in their own backyard or in the US on its own. Where we got some news today for the wheat producers concerning some frost conditions that are very serious over in Russia. Two of the areas over on that side of the world seems to have had, some frost damage from early May. And so that may be giving some troubles to what is actually going to be harvested. And of course, there's a lot of talk about what's going on in South America with the Brazilian floods. And we're trying to get a good grasp on what those conditions, as well as leading up to this, what is that doing for the South American corn and soybean production. So there's a lot going on right now, a lot to be aware of and a lot to be learning from. And so, getting into the growing season here in the US, for corn and beans, that's something that producers obviously are staying on top of.
We got some rain in Oklahoma and Kansas for wheat. Otherwise, corn and beans
Yes,
How do you see impacting the fertilizer prices and commodities markets with various aspects? Could you tell our audience about these two things?
with the rains that have been coming in Oklahoma and in Texas, for sure, as far as wheat producers go, it's going to give us a good edge to finishing out the crop. We're going to be coming into harvest here in West Central Texas in just a few weeks, and so producers are thankful for the rain, but along with that, we have had some serious weather issues that have accompanied those rains, such as high winds, hail, and a few tornadoes. And so, that's always something to be watchful for. And as far as getting a good crop going down here in Texas for corn or beans in the areas that we do have beans, always the rain is beneficial. And unfortunately, at times too much rain will give you planting delays. And so it's kind of half dozen of one, six of the other, depending on what time period we're talking about. But always the rain is very welcome. We have had concerns from producers, corn, wheat, soybeans, especially cotton producers, about the high cost of inputs, fertilizer being one of those. And like Mike had said earlier, I mean, we've had, some adjustments to those prices, but we're still at levels that do cause concern for producers as far as production goes. And so, how the economics play out between the different crops, that's certainly something that's been looked at carefully as they consider what to do going into the planting season here in Texas.
Yes, ma'am, we hope that helps for the farmers in Central Plains. Does this spring for fertilizer prices on this planting season?
Yeah, I mean, the planting delays you just touched on there, obviously is delaying side dress with it as well, which has actually been kind of a welcomed break in the fertilizer side of things because it's kind of allowing supplies to make their way back to where they need to be. We've saw very solid imports through Q1. So, the supply was at NOLA, it just wasn't in the Midwest where it needed to be on time, with that application demand showing up so early, kind of having such an early spring. That's kind of what said earlier, it kind of caught us off guard. So all these delays have actually worked out very well to kind of replenish the supply in the Midwest. We've actually kind of been able to see prices take a step back because of that. As the producers catch up here domestically and as the imports make their way up the river, throughout the Midwest where they need to be to the farmer. So overall, it's been a positive. We've certainly seen solid demand, but kind of planning between the raindrops at this point. I know Casey, it feels like it pretty much just rains every day at this point. Kind of have forgotten what the sun looked like around here, but thankfully we're pretty far ahead of schedule in this area. Obviously thoughts go out to those actually being impacted by this with the delays, but hopefully we'll get some windows here pretty soon.
Okay, how do you see impacting the fertilizer prices and commodities markets with various aspects? Could you tell our audience about these two things?
Yeah, the biggest story right now, I think, from the last time we spoke, is kind of the return of Chinese exports on the fertilizer side of things. China's government's restricted their fertilizer exports a couple times now in these last few years, kind of to focus on their own domestic supply, keep prices cheap within China. They used to be a massive exporter on both nitrogen and phosphate. They used to be the world's number one phosphate exporter. But back in late 21, kind of disappeared from the market and just hadn't really, returned to who they used to be. So obviously that restriction in supply, that loss of, a major supplier is a big part of why prices have been so high the last couple of years. But as they kind of came back, they were starting to ramp back up through last year. But then in the fall, the government said no more and restricted things once again. So to start 2024, exports out of China had been pretty much non-existent. And they finally have kind of relaxed those restrictions. We're starting to see tons flow out again. The phosphate side, they're kind of hitting the market already, weighing on prices pretty heavily. It's a big part of why global values have been able to correct as much as they have in the last couple months. Urea, there have been some delays, just kind of getting hung up. But still expect to see the tons, just maybe not as quickly as we initially thought. But India's kind of been the biggest buyer here recently. They've been the ones setting the tone globally on the phosphate side of things, and they've been a big part of why prices have dropped to this extent. They're starting to buy these cheaper tons, and not only that, from China coming back, other major exporters are having to compete. They're seeing these cheap tons coming out of China. If they want to make sales, they got to drop their prices. Saudi Arabia, for example, is a big one for that. India's been able to buy a lot of cheap DAP out of Saudi Arabia in the last month or so. And now with China coming back, it's kind of dropped prices further. The one thing I would kind of point out there, premium to the rest of the world this spring. But we have seen, NOLA DAP fall around $200 a ton in the last 2 months, for example. Probably still higher than we would need to be globally if we were able to import still from Russia and Morocco. But much better, obviously a correction, but, like Donna touched on, still a lot more expensive than the farmer would like to see, which is frustrating. If we're going to have these duties in place, we'd like to see more domestic production, that kind of thing, to offset that lack of supply, but it's not what we're getting, unfortunately. But we have seen that correction. Summer fill programs should kind of be coming out soon, so hopefully we can kind of dip down a little further, get to a little more attractive levels for these farmers.
We're asking same question for you, Donna, and the commodity prices.
With commodity prices, we've seen our spring rally come about for corn, beans, and wheat, and so it's been a good opportunity for producers to lock in some forward sales on new crop. And so with that, we hope that they have been taking advantage of it. But we do have a USDA report, a WASDE report coming out on Friday. And so those numbers could cause some adjustments in our pricing. And so we'll have to see what USDA has to say. That report will be released at 11 a.m. Central Time on Friday. And so between now and then, we'll be getting estimates from different analytical companies, giving us their take on what they think the numbers will look like. And as always, USDA can come in with a surprise or two. So we'll be seeing what 11 a.m. tells us.
From Brazil's soybean production. Finally, do you have any final thoughts on this planting season, fertilizer prices, world events?
Do you want to go first, Donna, or do you want me to?
Why don't you take it with the fertilizer aspect for sure?
Yeah, you bet. Yeah, so kind of parting thought, I would say, as we wrap up planting season, wrap up side dress season, the market's focus is going to be kind of switching over to summer fill announcements. I think it's definitely going to be a great opportunity. Like Donna just mentioned, we've seen a solid rally in the grain markets, and with fertilizer prices falling at the same time, and hopefully some solid summer fill numbers coming out soon. We should see some solid buying opportunities for next year's stuff at some point here in these next couple months. So I'd encourage farmers, have those conversations with your suppliers early. Make sure you can take advantage of the buying opportunities we do get. because, as we've seen in the last few years, when we get a good buying opportunity, it typically doesn't last very long. So good to take advantage while you can.
Great points, Mike. And for producers, we've always talked about looking to see what opportunities there are for pricing on 1 or 2 years out even. And there's so many different programs that StoneX has that could allow producers to do that. And so between hedging, forward contracts, and everything else that is out there, producers certainly need to be up on what their options are in doing their marketing plans as best they can, and that's why we're here at StoneX, is to help them with the risk management.
Thanks, you guys.
Yeah, absolutely.
This is
Thank you,
Mike
Cesar.
Castle and Donna Hughes from StoneX in Kansas City, Missouri.
No.
Thanks to Chris Robinson and Mike Castle with Donna Hughes from StoneX. Well, folks, there's our show for today. For the Markets Club podcast, I'm Cesar Delgado.